What's up, everybody? I'm going straight to the point here about fair value gaps, which is a hidden concept that ICT didn't share. The fair value gap, when you are looking at the candlesticks, it's actually a simplification of the market behavior, the price behavior, right? Because when you're looking at the fair value gap, for example here, this is a fair value gap, right? When you're looking at the fair value gap, just from the candle perspective, you're assuming that in this case, what the market did was a top, it was a bottom, and was a top again, and a bottom, and it keep moving upwards without revisiting the previous top, which is the equivalent to this candlestick here, right? Do you get what I'm saying? It means that this bottom here, which is this candle bottom, did not revisit the previous top. This is the fair value gap. So this gap here is what ICT shares as the fair value gap. You got it? This is an imbalance. This is how it works from a price perspective. But the candlesticks are actually an oversimplification of the price. Now, when you're looking at the candlesticks, you're actually looking at a, let's say, oversimplified price of a smaller time frame, right? So it's right to assume that, well, this is what the price did. But when you're looking at the current, whatever chart you choose, there's actually a higher time frame going on. And this is what my indicator plots. You're not going to find it anywhere because I developed it for myself, and like it took me 6 years to realize, to reach to this simplified version, right? I'm going to erase all the candlesticks because they mess up with our heads, right? So I'm going to quickly plot for you a higher time frame unbalance. Do you see this stop right here with this blue square? And do you see this bottom? So in a higher time frame, what is going on here is the fair value gap, which means that, you see the yellow square. I'm actually going to change it for a pink square because it's more visible. You see that? This is the fair value gap. If you're going to, let's say, create a candlestick here, probably the candlestick will look something like, well, it's a green bar, right? Probably the candlestick will look something like that. Whoops. Probably the candlestick will look something like that in a higher time frame. Now you can ask me, well, which higher time frame is it? Well, in fact, we don't know, because you can go to the weekly time frame and the candlestick will not be like that. You can go to a 3 days candlestick and probably it will be like that. So it doesn't matter at all as long you can see a higher time frame fractals movement, you know. And just like ICT shares with us, well, usually the fair value gap is revisited, right? This is what happens here. You have a fair value gap, and this fair value gap is revisited right there. And it's very common to see this price pattern happening. I will just plot some quick fair value gaps here, and if you want to see it for yourself, you just pause the video, right? And I'm feeling the moment in prices that these fair value gaps are filled in a higher time frame while watching whatever time frame you choose, right? This is the Bitcoin price chart. So you see that this is not coincidence. But of course, the problem with conventional technical analysis, right, is that they teach us how to look at tops and bottoms, but they don't give us a mechanical way to measure tops and bottoms. And the few mechanical ways that we have to measure tops and bottoms, which are indicators like zigzag or I don't know, whatever there is, like for tops and bottoms, they are deprecated, they are old, they do not adapt to the volatility, to the price acceleration, they do not adapt to the market at all. So you have to develop something for yourself to mechanically see the tops and bottoms and with the condition that they do not repaint, right? Because zigzag repaints, for example. You cannot trust it. So this is the quick overview, the quick explanation about the concept of fair value gaps that ICT shared, right? This is completely decoded. And if you have a tool like that, you can actually see a lot of patterns, you can actually see a lot of targets, you know. ICT likes to share his price targets. Well, I have my price targets too, right? It's the green line here, with the white line, and the blue line, which is the super target. Rarely it reaches there. It's actually a good point to place a stop loss if you're trading in a range, which I'm not going to talk about it right now, and not going to talk how do you measure the targets. But they are usually, you know, respected. They are really respected. So this is it for now. I'm making quick videos here just to grow the community. Hopefully it can help someone. I've been trading for 10 years already. Well, actually it's 11 or 12 years. Traded in quantitative trading firms. I am a quantitative trader, and I've traded in proprietary trading firms too. So I can tell that you're not going to find this content anywhere, and simplified like it is. Have a great day. See you in the next video.